Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak here at Podcast. Good morning. It's Wednesday, the 22nd of October. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the price of gold sees its biggest fall in more than a decade, raising questions about its record-breaking rally.
Europe and Ukraine are working on a proposal to end Russia's war to pitch to President Donald Trump.
Plus, why an overburdened sewer in Cambridge has become a symbol of the UK's struggle to overhaul its economy.
Let's start with a roundup of our top stories.
Gold has seen its steepest sell-off in years, putting an abrupt halt to its record rally. Prices in the precious metal dropped by as much as 6.3% in trading yesterday, the biggest intraday fall in more than 12 years. Suki Cooper is Standard Chartered's global head of commodities research. She says this is the first real test of the mega rally.
We think that currently we are seeing something of a healthy correction. We wouldn't be surprised if we see prices dipping below $4,000 per ounce. From a technical standpoint, I think that provides the best guidance in terms of what sorts of levels we could be looking at in the near term.
Cooper notes that gold prices are still up almost 60% this year, and she expects them to recover. The metal's record-breaking year has been driven by buying from central banks and worries about fiscal deficits and inflation.
US President Donald Trump says that he doesn't want a wasted meeting with Russia's Vladimir Putin. Trump told reporters he isn't scrapping a planned second summit, but he repeated his desire to see the war in Ukraine frozen along current battle lines, a position repeatedly rejected by Russia. The US President says that he's still assessing the situation.
I don't want to have a wasted meeting. I don't want to have a waste of time, so I'll see what happens. But when I said go to the line of battle, the battlefield lines, and you pull back and you go home and everybody takes some time off because you got two countries that are killing each other. Two countries that are losing 5,000 to 7,000 soldiers a week. So we'll see what happens. We haven't made a determination.
Donald Trump was speaking after a White House official had said earlier that he and Putin had no plans to meet in the immediate future. This after a phone conversation with the Kremlin last week, with President Trump having said that he would meet his Russian counterpart within 2 weeks or so.
European countries are working with Ukraine in a fresh effort to end the conflict with Russia. It's the latest pushback against Vladimir Putin's renewed demands for surrender. Bloomberg's Tiwa Adebayo has more.
The return of deported children, prisoner exchanges and security guarantees. All ambitions of a new European proposal to end the Russia-Ukraine war. Bloomberg understands countries in the region are working on plans to be overseen by a peace board chaired by US President Donald Trump. Under the agreement, sanctions on Russia would gradually be lifted and Ukraine would also receive funds to repair war damage and a pathway to rapidly join the EU. According to sources, European officials may travel to the US this week to discuss the plans, and any proposal would still need buy-in from Washington. In London, Tiwa Adebayo, Bloomberg Radio.
The US president has raised hopes of securing a good deal on trade with China's Xi Jinping, but concedes that talks between them may fail to materialise. Donald Trump says that he has a great relationship with Xi and expects their planned meeting later this month to be very successful. But he also acknowledged that things can happen that might get in the way of a meeting. Our senior US government editor Derek Warbank says Trump is leaving himself an exit route.
If we're looking at vibes, we're in happy talk right now, but there's an awful lot of uncertainty here. I do think that you're seeing a president who does not want to lock himself up into the idea of having to make a deal, the idea that no deal is bad and that any deal is better than no deal. I think Trump very much is saying, I think we can make a deal. I'd like to make the right deal, but he's giving himself space to walk away if none is presented.
Derek Warbank there. Xi and Trump are scheduled to meet at a summit in South Korea in 2 weeks' time, while Treasury Secretary Scott Bessent will meet his Chinese counterparts over the weekend to lay the groundwork for a de-escalation of trade tensions. It comes as the US president said that he'd had assurances from India's Prime Minister Narendra Modi that the country would wind down purchases of Russian oil.
Netflix says a tax dispute with Brazil cut into its third quarter earnings, marring results that otherwise fell in line with Wall Street estimates. The world's most valuable entertainment company posted quarterly operating income of $3.24 billion, around $400 million below its own forecast and analysts' estimates. Netflix had to pay around $619 million to settle a multi-year tax dispute with Brazilian authorities going back to 2022. The company said it doesn't expect the matter to have a material impact on future results.
Now to breaking earnings news. The Italian bank UniCredit has reported third quarter profits and revenues that beat expectations. Net income came in at €2.63 billion, some 240 million above estimates. The bank has maintained its full-year profit guidance at about €10.5 billion. UniCredit has been on a buying spree in recent months, building stakes in Greece's Alpha Bank and Germany's Commerzbank. In July, UniCredit dropped its bid, though, to acquire smaller rival Banco BPM after opposition from the Italian government.
Bloomberg has learned that Anthropic is in talks with Google about a deal for cloud computing services valued in the high tens of billions of dollars. The plan, which has not been finalised, involves Google providing cloud computing services to the AI company. Sources told Bloomberg the deal will allow Anthropic to use Google's Tensor Processing Units, or TPUs, the company's chips that accelerate machine learning workloads. Talks are in their early stages and the details could change.
Bank of England Governor Andrew Bailey is warning that alarm bells are ringing in the private markets. The central banker says that when he has looked at the way that loans are structured in the sector, he sees echoes of 2008.
If you're involved before the financial crisis or during it, alarm bells start going off at that point. I sat in a session with people from the private equity and private credit world some months ago, who of course told me that everything was fine in their world apart from the role of the rating agencies. And I said, well, we're not playing that movie again, are we?
Bank of England Governor Andrew Bailey speaking there to members of Parliament here in the UK. He is the latest veteran of the global financial crisis to publicly worry about private credit after JP Morgan CEO Jamie Dimon spoke of cockroaches last week. Private credit executives, though, have hit back, saying that they shouldn't be attacked for legacy banks' failures. So those are some of our top stories for you this morning. Let's just go through the markets this hour. So we did see yesterday a plunge in gold and silver, but that has eased in Asia trading hours. We did see, though, a big bout of volatility. Asian stocks this morning are mostly lower right now for the MSCI Asia Pacific Index. US equity futures gaining, European stock futures down this morning. 10-year Treasury yields easing about a basis point to 395. Bitcoin has stumbled. We're down more than 2% this morning. Oil is up on that possibility of a US-India trade deal and loads of earnings today. Heineken, for example, cutting its adjusted operating profit growth outlook. So that and UniCredit and many others.
Well, in a moment we'll bring you more on the big moves in gold and silver prices, plus why a problem with sewers may be holding back the UK's life sciences ambitions. But another story that I've been reading this morning is the shine already disappearing from Labubu dolls. I mean, I feel like that they come up in conversation far too often for really anything to be healthy. And Bloomberg Opinion columnist Julie Ryan has been writing about this and how it might not just be me who's sick of hearing about them at this stage. Shares are actually down in PopMart from 25% from their August peak. And the question that investors are now asking is PopMart a one-trick pony, or can it transform Labubu into a sort of a lasting brand? She looks at the likes of Pokemon or Lego, who've managed to make, particularly in Pokemon's case, a viral trend last into continuing and extremely large revenues. And she's particularly worried about scarcity.
Yeah, listen, Lego's an absolute machine, and it doesn't look like PopMart is yet there. Look, I had to have a little look on Amazon and other websites to see this morning. Labubus are still incredibly scarce, and the other offerings like Crybaby and others are available. So you have to think they haven't kind of caught fire as much with buyers. But yes, definitely I see a worrying number of Labubus attached to adults' bags of various description. I think it's pretty strange. But it's clearly got us all interested.
the question. You know,
Well,
this is part of the action. And look, the question of scarcity is an interesting one because it's a good strategy from one point of view to drive up prices. But actually, Sheila Wren says that risks alienating people who'll just get sick of it and say, well, I can't buy one, so I'm not going to bother. And she talks about this term, the IQ tax, which is slang in China for someone who has, with bad judgment, who pays an exorbitant amount for poor quality products. And she says that Labubu could be at risk of people talking about an IQ tax on people who buy them in the future as well. It's a great piece. You'll find it at bloomberg.com/opinion, and we'll put a link in our podcast show notes as well.
Right, let's talk about our top story. The price of gold is stabilising this morning after its biggest drop in over a decade yesterday. Silver, which had also hit record highs in recent days, slumped too. Our Markets Live strategist Mark Cranfield joins us now for more. Mark, good morning. How significant was the drop in gold and silver, and why did it happen? What drove it?
Yeah, good morning. Very significant, as you say. Gold had its biggest drop for more than a decade, and it looked as though it was going to continue this morning. Gold and silver in the early stages of Asian trading today, they were very weak, but around the 4,000 level, pretty close to there, that's where we saw the dip buying come in to stabilise gold. So for the time being, it looks as though people are still very interested to get back in, but the whole thing is starting to look a little bit precarious. It's no secret that a lot of speculative money has got involved in gold and silver over the past few months. You can tell from the ETF numbers, the futures numbers, general turnover in the markets, and the fact that you're seeing queues of people at gold shops, whether it's in Sydney, whether it's in India or Vietnam, all kinds of places in the world. That is usually the sign of a market top. It's probably have taxi drivers probably recommending it as a good investment as well. Certainly all the things are in place to suggest that the market is overheated. Quite possibly we've seen the peak for this year. It's going to be a bit volatile and bumpy from here on in, but with so much money sloshing around, positions very large, you would expect things to be choppy and volatile for a little while just yet.
Does it expose a question of broader risk on markets, and that if the momentum behind gold is faltering, should we be even more worried about equities, which has also seen repeated record highs?
Most certainly, if we see any cracks in this earnings season. So two places where people are putting the lines together is that the AI-related trades, people have been jumping into all kinds of themes related to AI. There may well be a lot of overvaluation in that space, and gold was running up at about the same time as well. Gold is beginning to soften now. If we get some discontent with what the AI outlook is for 2026, if some of the suggestions from the major firms over the next few weeks are not as rosy as the big numbers which have already been put into their pricing for their stock prices, then people will probably put two and two together and say, okay, AI is running out of steam, precious metals are running out of steam. There are the two biggest momentum plays of the year are both faltering, and the two could feed on each other. That would certainly be a big knock-on effect across asset markets. So now it really depends on what these big tech companies have to say about the outlook for next year.
Yeah, I think that is really, really interesting. I wonder whether you've also read John Author's latest column out this morning, where he talks about after such a big year for gold, it's a gold dinger. I liked that one. Mark, thank you so much for being with us this morning. Our Markets Live strategist, Mark Cranfield, giving you some lines and explanations about what's been happening in the precious metals markets. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Well, the UK's ambition to become a global leader in life sciences is being put to the test in Cambridge, where rapid development at its biomedical campus is being hampered by strained local infrastructure. Despite major investments from companies like Prologis and the presence of pharmaceutical giant AstraZeneca, basic utilities like wastewater treatment are struggling to keep pace. Our health reporter Ashley Furlong joins us now for more on this story. Ashley, why is the sewage system a problem in Cambridge?
So the real problem is with Anglian Water, which is responsible for sewage in Cambridge, and what they have is they don't have extra capacity. So they have to take sewage from things like your household taps or your toilets. What they don't have to take is trade effluent, and that you need to apply for a license. So if you're a biotech company, you're a big pharmaceutical company in Cambridge, and you want to open your new lab there, you need permission to be able to discharge your waste into the sewage system. And Anglian Water is saying, sorry, we can't take additional waste. So that developers are telling us that that's really become a significant problem for them. Prologis, for example, have built these massive tanks underneath a new development that they're building there. They need to sort of have an alternative. They're really saying that we'll just put these tanks there and we'll get trucks to come and take the waste away to ensure that they can actually get new tenants into their building.
And for it to be able to function. That's interesting. Is it part of a wider problem in the UK then? I mean, we've heard so much about the issues of, the water companies across the UK.
Very much so. So this is not just an Anglian Water problem. Obviously, Anglian Water is responsible for Cambridge, so that's a problem in this life sciences hub. But across the country, we're seeing problems with sewage. You'll know when there's heavy rains, the rivers will be flooded with sewage. In summer, you might be worried about going to swim in the sea. So this is a problem across the country, and these private companies are really responsible for maintaining and increasing the capacity to take on additional wastewater. And obviously the government has very ambitious house building targets, which are going to mean, even additional waste in the sewage system.
It's certainly not a headline that you want to have associated with big ambitions for transforming the UK economy and the emphasis the government has put on life sciences in particular. How are these problems interacting? How are they affecting the ambitions that the government and others have for attracting more investment in this area?
It's a massive problem. So the sewage problem is just a small sort of symbol of a much wider issue within life sciences in the UK. So we've seen AstraZeneca say that they're not expanding or halting their expansion in Cambridge. We've seen US company Merck say that they're pulling out of a new facility in London. And companies across the life sciences industry are really saying that the UK needs to be more attractive. We've got the US, we've got President Trump saying, build your manufacturing plants in the US. We've got companies like Singapore offering, incentives. UK is really not offering anything comparable at the moment.
And so in terms of next steps, the pressure is obviously on the government to do more on this. What are they talking about? How are they thinking about this?
I think that the next critical step is going to be to see what happens with drug prices. So at the moment, there's negotiations ongoing with the US around the UK's drug prices, which are very, very low, particularly when you compare them to the US. And the US is obviously saying that the UK needs to increase drug prices. Pharmaceutical companies are also saying that. So I think if we get some stabilization with drug prices, companies might actually say this might be a better place to invest. We might actually want to do more R&D here. We want to bring our drugs to British patients. But at the moment, that's really, we're seeing sort of a standoff at that when we don't have an agreement yet.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.